Hi guys, it's Simon with Trading Perform Coaching and ToughTrader.com. Here to see if I can't help some traders decipher what happened today and take care of our goals. So our goals are always the same, right? When we come through a day, we want to see where we did well, what we did poorly, and work to improve both ends of that area, right? So it's very, very important, right? That for me, even if you didn't trade well, which I think everyone in the room did today, but even if you didn't trade well, right? Um, what what could have you done to trade, particularly ES better, but also the other, the Euro, the CL? What could have you done to improve on the day? So first, let's go in. The purpose of this is to help traders get better. So um, that's what the entire trade review will be geared towards. So the first thing that you're going to notice when we get on the day is that there are no yellow zones. Excuse the voice for a second here. Let's grab a sip of water. First thing you notice is there's no white or yellow zones anywhere nearby. There's a specific reason for that, right? So if we come and look at the volume profile before I get started with the actual day, if you look at the volume profile, what you're going to see here is that we're still stuck inside of um, Tuesday's range, right? It was a very wide-ranging day, and we haven't been able to make it above or below. I'm going to pause for just a second and clear my throat. Excuse me just a second here. I know that my voice isn't absolutely beautiful, but boy, it has just to be horrifying with a frog stuck in it, right? So, a couple of things that I wanted to point out to members in the room this morning, and I'm going to point them out to y'all as well. That first of all, this entire range through here, this whole thing, notice how easily we slip through. See this? Down, up, down. There's no particular place um, where the market has made any attempt to take a stand on any one particular location. This whole area really it gets sloppy below 2460 all the way down to, let's call it a little bit higher than that, 46 to 43, right? So this area has proved repeatedly that we can zip through here in very quick fashion, right? So what's the challenge with that? Well, as a trader, right, we're trying to accomplish two things at one time. We want to have a high degree of confidence that we can take a trade that'll make us money, but at the same time, right, we don't want to take a trade where we'll lose money. So what do we do in a situation where there's no clear area of support or resistance and we're day traders, right? So if we're swing traders, it's not a problem. I'm going to wait for a clear setup. I don't expect to trade every day, but day traders have a higher bar because they're trying to trade every single day. So these are the tools that we're going to use. Rotation size, tick divergence, right? If the overnight offers any clues, we'll look at the overnight price action, right? And then we're going to look if we're above or below prior day's low, right? And then we're going to also look as to whether on the open, whether NQ, which is the Nasdaq 100, or ES, the S&P 500, are trading in sync or out of sync, and if they're out of sync, which one's leading, which one's following, right? And so we're going to take all those pieces, right? And I'm going to use in the room when I'm in the mentor room, I'm going to use that experience to help coach people through what the market is showing us so they can help them make better, more informed decisions, right? And we're not going to be able to lean, right? So if we're in this area where we've traded through easily, the overnight is not giving us the day profile is just simply not giving us a lot to lean against, right? So let's go and see how we actually handled it. So the green zones. Green zones mean that they can easily get traded through in both directions. The reason why they're there is there's still support resistance areas, and I expect a pause. Give me just 1 second. I know, and I apologize. Forgive me. I'm going to expect a pause in these areas, but I'm also going to know that they can easily trade up and down through them. So I'm going to need different types of evidence in order to be able to trade in those areas. So let's move to the open. You'll see I'm going through here on the open, and I'm discussing the lay of the land, right? So the first thing you'll notice that we have to deal with in the morning is that we gap up, right? So gap ups bring certain challenges. First question is it going to turn into an open drive higher like we had last week where the market just drove and drove and drove, right? Now, understand this is a place where a lot of traders lose money. When you see 3 days of gap and go, gap and go, gap and go, right? Traders start to go, well, we're obviously just going to run all day, and they start taking longs right up here. But you'll notice something very, very interesting. Notice this open was right up against Globex high, and the opening print was 24.6650, which was also Globex high, right? Now, NQ's opened and held above its opening print, but below Globex high as well. If you'll go back and look at last week, you'll notice we were at Globex high and above the opening print from the get-go, right? So when you finish the first 5-minute bar here, right? So the first 5-minute bar is now finished. Now notice we don't have all the components that we need. First of all, tick on an open drive higher tends to open up at plus 800, right? Secondly, we tend to open above the prior day's high, and we certainly don't trade below the first 5-minute bar, right? So you can see here that this is on a 15-minute bar. I didn't correct the NQ quickly enough. It was stuck on 15 minutes. But you can see on ES we're already below the first 5-minute bar. That's really helpful, right? Immediately I'm off the table with trend day up as the primary possibility, right? Next, you can see the first touch into the green zone coincided with the open gap. I'm not a big gap trader myself, and this is the reason why. The gap sometimes works and sometimes doesn't. If you go measure all of them, it's about a 50-50 deal. I find in my experience in coaching day traders that 50-50 win rates are not sufficient because there's not enough day traders that have a one-to-one risk reward. And even if you did have a one-to-one risk reward, you actually need a better than one-to-one to make a 50-50 trade work. So you want at least a 60% win rate, and it's also what I refer to as a local or visual location, which is weaker than an institutional location. So I do nothing here, right? There's nothing for me to do. I don't have a 10-point rotation. Tick is positive, but not indicating open drive higher. And so this is most likely going to lead to a open auction, right? So if you look, next bar comes in, and we immediately bounce 2 points off the green zone. Again, I didn't take it because I don't trade the green zone, so it's not an issue for me. And what you'll see here, and I'll correct this in just a second, you'll see I get to there we go, I fixed it, or I'm about to. There's the 5-minute bars, right? So you can see NQ pushed down, ES is now for all these traders, right? So one of the reasons why I coach people not to worry about the open gap, if you're a scalper, that's fine. But again, it's a 50-50 deal, and it gets shot through a lot. Now I want to show you something. We pushed down here to negative 400 tick, and the first thing you'll notice is that NQ is not rolling over with ES. Look at the degree that ES is pushing down. Look at the degree to which NQ is rolling down. Not very much at all. NQ is just barely breaking below its first 10-minute swing low, right? You can see that I've switched the chart back to 5 minutes over here. Again, the green zone is relatively porous area. I do not take a stand in green zones. I'm looking for another setup. And what we noticed was from the overnight was that 2460 area was where we wanted to be looking long from. Now, something really important, I'm going to advance this, and I'm going to make this the same trade review for members as I am for public members. So guys, remember I was talking about this 2460, and I just want to reiterate this, right? One of the things we did really well, this is a challenge. This is an overnight support area. It's not a zone, although we identified it as a support location, right? We're at risk now as both ES and NQ are both floating near the lows, though the rate of decline is much stronger in ES. And, right, notice that ES is leading to the downside. If you recall from yesterday, ES was leading to the upside. All this makes for, this is the changes, the rapid changes in the market. This is what makes day trading so difficult, right? You've got to know what are the important things, right? So what's the rotation size? We've gone from 66 down to 58, an 8-point rotation, right? And we haven't had an open auction. It's pretty much been a pseudo open drive lower. What's the wrong with this picture of saying this is an open drive lower is the tick. The ticks are barely negative at all through all this press down. And we had one more challenge today. It's futures rollover. That's when hedge funds and hedgers and speculators have to close out their positions in the September contract and start trading the December futures contract. And that makes for wacky price action, right? So our goal was to get long this 2460 for my aggressive traders. There was no zone here, right? But I'm going to show you how, even without the zone, watch how this developed. I'm going to push this forward a few bars, right? And what you'll notice here in just a second, okay, see on this push down here, right here, market pushes down, right? And notice we come down to test the low, and tick is improving. See that? Now, it's not tick divergence, because for tick divergence you need a new low. But the other thing that you'll notice is when this bar pushed down right here at 930, look at the same 930 bar on NQ. NQ is back within its first 15 minutes range. It barely broke the low, and it's pushing back towards the mid. It actually looks pretty strong. And if you recall in the afternoon how we've switched shoes, right? Yesterday in the morning, NQ was weak, ES was strong. This morning, ES is stronger than NQ, right? So this was our clue right here, in addition to just taking the 2460. Also, what we're looking at is the longer ES can sit in this area, right? If the shorts can't break this, remember, most bad traders are emotional traders, and they're shorting down here thinking, oh, we've got trend day down, and we're either going to come down to the naked volume point of control or retest Wednesday's low or Globex low. So remember, this is the bait that late week traders, like if you're going to short, this is where you should have been shorting, right? This is the bait where late week traders are coming in. 25 minutes to 30 minutes sideways. We've had plenty of shorts, and now we know if we can get behind these wicks right here, these shorts are going to have to cover again. All of this was done in real time in the room, right? So members, what we knew is if we got long here, what was the risk? The risk was that we were going to get stopped out, right? But we knew we had overnight support in this area and that we should push, and we knew that NQ was leading. Both of them are good signs, right? So the next bar now, right here. Okay, see when this bar closed right here? When this bar closed in, everyone who was short starts to get nervous. As soon as we close behind this bar is when the shorts are going to get squeezed. And notice this, these shorts that are over here or are fighting against NQ now making a new high on the day, right? Now watch as it progresses forward. Right here, okay, right on this bar right here, shorts are now out of luck. Now remember, the green zone's not strong resistance. The reason I had that 50-60 back is to show where these guys are going to get run over. Weak traders, again, are going to try and use that 50-60 back, but when you don't break IB low with the first hour low and you come back to the 50 retrace, it's highly likely to get broken in both directions, by the way. Okay, so rolling forward, right, we're going through the morning. Now remember, we're long from this 2460, right? We've already taken all our scales out towards 2460, 475. That's a 4-point trade. I'm really happy with it, right? Rolling forward. Now, the one thing I mentioned up here, now, what I'm trying to help is make the distinction between good traders and bad traders. Bad traders are now looking at this, and just like they felt comfortable going, oh, the market must be going lower, I can short here, look at these ugly red sticks. Now they're seeing the green, and they're feeling really good about themselves. They're like, NQ's broken to a new high. We must be going higher, right? Again, this is more indicative of open auction or balance type environment. We're going to roll forward a little bit. And notice, okay, so I want you to notice this. So I'm going to come back. Right here, right? People are looking at this and they're like, oh, look at the consolidation. It must be safe to get long, just like people thought it was safe to get short down here. And what I mentioned was, and I'm going to draw it up, you're going to see in a minute, I'm going to say, you've got to anticipate that we're going to come back and at least test the 50-60 retrace here, right? So you can't get pulled in by the bait. Remember, this is really easy for bad traders to get sucked in because of the trend days up we were having just last week. Quick sip of tea here. And I'm talking remember, in the room and in my head and in my trade plan, I'm talking myself through this. Why? I've just scaled, right? I don't want to talk myself into getting long again here, trying to catch a break to the upside, right? I want to talk, what I'm talking about is getting long on a pullback back towards 2460. I want to be in a position of the strong trader, not the weak trader, right? So if you push forward here, okay, now look, see that big negative tick? Now I want to show you something here. You're about to see this. Okay, on this big negative tick right here, right? Now realize, everyone who took the long here because it felt safe, think about the average retail trader, right? That thing went from 65 all the way back to 62. Most of you guys are trading with anywhere from 4 to 8 ticks a stop, right? Anything past this 50 retrace, people will panic, right? And watch what happens next. So see that right there where it dropped down? See how right there. That's all the stops getting run, right back to 60.75. And look, that's a retest of the breakout point where we squeezed the shorts earlier, right? So my guess is if you looked at the worst traders out there, you'd see that these guys were getting short in here, covering up here, getting long here for the break to the upside to follow NQ, and now they are getting strung out. We're looking to get long again towards this 2460. Again, we're looking for a negative 600 tick to come and light us up. We don't get that, right? Now, see right there? See that negative 600 tick? Okay, now we're looking long, okay? and watch what happens through here. You'll watch and you'll see the nice rotation back up. Look at the rotation. Look at the difference from the guy who's chasing up here to the guy who's patiently sitting down here, 24.59, 24.60, right back to 24.62.50, right? Again, look at NQ leading. I guarantee you up here there's people chasing up here again. Now, if you'll watch what happens when we push through lunch, right, you're going to get tick divergence through here in just a minute. Now, see that right there? Go back. New one tick low of the day. See that? We pushed just past 24.58, the low of the day. Clear tick divergence through here, right? Clear tick divergence. I haven't updated the NQ chart. Again, several members caught this tick divergence right here. Now watch what happens through the balance of the afternoon. Now we're going to come up. Now realize from right there, you saw the tick divergence. You're long 24.58. You've already rolled up to 24.61. That's a great place to find those responsive buyers and push back up. Right, and you're going to see ultimately we pushed up towards 24.62, right? So that's a 4-point rotation back up, and then once I get back, you'll see me coming over here and fixing. I did a bit of that was an afternoon webinar I did for the members in the room, talking about the euro trend day up that we had today. Now look, there was the low, there's the rotation up, again 4.5 points. Right back to the mid of the day, right? And you can see again the green zone. See how porous it was on each side? It acted as support. Sometimes it acts as great support, but usually it gets poured through on each side. And I know not to use this area or to look for additional evidence in that area. And let me tell you something, folks. When you're trying to find an edge in the market and trade well, this is what makes the difference, right? Understanding, hey, this is support, but it's not great support. Understanding, hey, this is the rotation. Look at the strength in NQ. We probably roll back up. Where are shorts getting trapped? Where are longs getting trapped, right? Where is the tick divergence coming in? Where are late people coming in to press but unable to break the lows, right? This is taking fear that you have in trading and turning it on its head. This is using strategy to go, I'm not a chaser. I look for those who chase and are panicking out of their positions, and I look to take them the other direction. That's what we do in the room. That's why it's become toughtrader.com, right? Because we're mentally tough. We're mentally tough because we follow a process, right? And we want people to panic into our positions down here to take advantage of the counter rotations, both in NQ and ES. The other thing you'll notice here is when we hit a low here, NQ did not hit a low. And that is how we consistently defend our downside so that we don't have major drawdowns. That's rule number 1. Is do not blow up. Rule number 2 is do not draw down. Anyways, I think I went through the day in detail again. Guys, tomorrow we're looking to do the same thing. This is still a desert as far as the market profile goes. I'll pull it up again one more time so everyone can see it. Market profile is still a desert. Your nearest resistance is up here in that 75.80 neighborhood. It's pretty clear above. There's not a lot of distinctive support below, right? The bottom of the range for support is 46 to 43 area, and let's just see where the market takes us overnight. They did give it a push there at the end of the day. It's got to get below 60 right now. Is kind of the hurdle rate there. If we don't get below 60, expect responsive buyers to push up. It wasn't a horrible day. It wasn't terribly destructive. It was just a consolidation day, and we've now actually built decent support there in that 60-63 area. And so the market's going to have to work hard. Below 60-63, guys, for tomorrow. Below 60-63 brings up back up to the bottom of that range potentially, right? Before we find, that's the old balance area here. And again, there's not much from the volume profile in the way of support on the daily chart. I'm not going to go through the 24-hour. I'll do that in the morning. So we'll just have to see. If we can hold this 60-63, expect to push towards 75-77. We are building energy for a move. Let's see which way they take it. Anyways, I hope everyone's learning from this. If you have any questions, please do not hesitate to reach out to me. My email is tradeandperform@gmail.com. TRADEN perform, PERFORM @gmail.com. If you have a question, if you'd like to join us in the room for 5 days, ask for a 5-day pass into the room, please don't hesitate to ask. I'm happy to invite you in. And I just hope everyone had a good day. I hope they learned a lot, and I hope you're a better trader tomorrow than you were today. That's the goal. Have a good night, guys. See y'all soon.